Good morning everyone and welcome to Morning Markets. Today we'll reflect on how asset markets performed last week and then look to some of the events for the week ahead. So just looking at how asset markets performed last week, certainly a weaker performance from both equity and bond markets over the course of the week. And really there's a number of factors at play last week, some of which we are familiar with and have been discussed on Morning Markets many times, others slightly newer, and maybe focusing in on those firstly. We had ongoing unsettling news from China. We've discussed how Chinese economic recovery post-COVID has been challenging, but last week really brought to the fore some of those challenges, particularly as it relates to the housing sector in China, with Evergrande, one of the largest property developers, filing for bankruptcy protection in the US. And then ongoing challenges for Country Garden, one of the home builders that was thought to be much more resilient, and some challenges being faced there as well. Added to that, we heard that a Chinese asset manager had missed its coupon payments on some of its bond. And that really did unsettle and make markets a little nervous, and that led to really weakness in Asia, which was also reflected in European and US markets. We've also talked about the strength of the US economy, and that was another factor that certainly did influence how bond markets performed last week. And in particular, just the strength and the resilience of the US economy really starting to feed into a narrative and discussion that interest rates will have to stay at a higher level for a longer period of time, just to ensure that we don't see a re-acceleration of inflation. If we look back to how that has sort of manifested itself, I talked about the weakness in equity and bond markets. We did see strength in the dollar as a result of that, and really that is driven by the expectation that rates will be higher for a longer period of time. I think then, just looking to the week ahead, a couple of important data points that we'll get. Yes, there will be the ongoing economic data points on which the team will comment, but we also hear from NVIDIA, one of those companies at the heart really of the AI revolution. We cast our mind back to earlier in the year, May. The announcements from NVIDIA certainly forced the equity market higher in the case of the US. We'll be looking to see how their results are reflected on Wednesday. And then at the end of the week, we have the usual Federal Reserve Economic Symposium. An expectation there, we will hear from Jerome Powell and his thoughts on the economy. Difficult really to see that they will say anything very different, given we had the Federal Reserve minutes last week about the strength of the economy, the focus that the Fed have on bringing inflation back to target. Those are certainly things that we'll be commenting as we look to the week ahead. Just to conclude today, back to China, some of the challenges there. We've heard this morning that the Chinese authorities have reduced the one-year loan prime rate in really response to try and do something about this economic malaise, the challenges that we're seeing in that economy. I'll leave it there, but please do join us again tomorrow.